Without a doubt, 2020 was one of the best years to have been invested in the stock market, with the S&P 500 up over 18% despite enduring one of the worst recessions in history. And given the record low interest rates, along with all of the financial support from the Fed, investors have moved to a more risk-on mode of investing, whereby they're taking higher multiple growth stocks more seriously than ever. Now, whether or not you agree with this strategy, there is something to be said about the historical returns of growth investing being nothing less than incredible. In fact, one of the best ways to make these high returns in the stock market while reducing the overall risk in your portfolio is through investing in growth ETFs, also known as exchange-traded funds. If you aren't already aware, an ETF is simply a group of assets like stocks or bonds that trade like a single stock with a ticker symbol. And the benefit to you as an investor is that you can diversify your portfolio extremely well at a very low cost. For example, the S&P 500 index contains the top 500 companies within the United States, but you can decide to purchase all of these companies together under a single ticker symbol known as VOO. Now, this ETF in particular is offered by Vanguard along with all of the other ETFs I'll be sharing in this video, and that is because Vanguard is the industry leader in providing low-cost, well-diversified, and outperforming ETFs for each individual investor. And the main benefits to you as the investor are that large fees are not going to be eating away at your returns over the long term, which can have a significant impact on your returns, as well as knowing that Vanguard ETFs are the best of their kind in terms of outperformance within the industry. So in this video, I'm going to be sharing the top 3 Vanguard ETFs for growth investing that I could find, and I'm going to be comparing them side by side to give you the best one to pick for your portfolio. So make sure to give this video a like for all of the research that went into this video behind the scenes, and if you haven't already, definitely consider subscribing for more investing content coming soon. And with that said, let's jump right into these Vanguard ETFs. All right, now the first ETF up on the list here today is the Vanguard Information Technology ETF with ticker symbol VGT. Without a doubt, this ETF has been one of the strongest performing funds over the past decade. And over the past 5 years, we can see that it's over doubled the performance of the S&P 500, which is typically a very strong benchmark for stocks over the long term. Additionally, the fund has done extremely well over the past 1 year, being up about 77% from the March lows in 2020. And this is largely due to the fact that because of the pandemic, everything's been moving towards technology and away from brick and mortar retail. Now, taking a closer look inside the fund, we actually find that the top 10 holdings are some of the largest companies in the world. So you've got your Apple, Microsoft, the payment processors Visa and MasterCard, and then Adobe, Salesforce, and many more. And with 341 stocks in this ETF having a median market capitalization of nearly 250 billion, you can rest assured that the majority of these companies are critical to our economy today and are not going to be going away anytime soon, meaning that this fund actually provides a relatively high level of safety for investors over the long term. Now, what makes this ETF so attractive to hold on top of the stellar performance we've already seen has got to be the low annual fee that it costs to own it, also known as the management expense ratio, or the MER. Currently, the MER is sitting at 0.1% annually, so with a hypothetical $10,000 invested in this fund, you'd only end up paying $10 per year in fees, which is extremely low compared to the much higher MER of 1.24% for similar funds. Finally, another bonus to owning this ETF is that you'll be paid a small dividend in cash every 3 months, which is known as a distribution for an ETF, and right now the distribution yield is sitting at about 0.75%. Overall, my thoughts are that this ETF has done extremely well over the past few years, and it's up for debate whether or not this growth is going to continue, but I don't see the information technology sector slowing down anytime soon. All right, now the second ETF up on the list here today is the Vanguard Midcap Growth ETF with ticker symbol VOT. Again, we have another great pick that's done extremely well since the Great Recession in 2008, and over the past 5 years, it has beat out the S&P 500 once again, but by a smaller margin than VGT. And more recently, over the past year alone, we can see that VOT has done extremely well, just like VGT, being up about 77% from the March lows. Now, taking a look at the top 10 holdings within this ETF, we can find some popular social media companies like Twitter and Pinterest, along with Roku, Chipotle, and DocuSign. So clearly, these companies are quite a lot smaller than what was found in the VGT fund, with each company having a median market cap of around $27.4 billion for 163 companies in total. total. Now, because this ETF isn't primarily focused on information technology like VGT was, we actually find quite a bit more diversification among different industries, where technology still takes the top spot at about 34% for the fund, but then you've got 16.7% in healthcare, 14.3% in industrials, and 13.2% in consumer discretionary. All right, so moving on to the fees, we find that VOT is incredibly cheap to own. It's even cheaper than VGT, with an annual MER of only 0.07%. This means that for every $10,000 invested in this fund, you'd only end up paying $7 per year in fees, which in my opinion is completely reasonable. And it's also much cheaper than the 1.15% average MER of other similar funds. Finally, this ETF does also offer some passive income through a distribution yield of only 0.44%, so it really isn't that much and it shouldn't be a reason for purchasing this ETF, but it is there regardless. Since growth companies reinvest a very large portion of their cash flow back into the business to help it grow, it means that they don't have a whole lot of cash flow to pay out distributions or dividends. And so if passive income is your goal, you're better off choosing a dividend growth ETF rather than just a growth ETF. But overall, guys, this is a solid ETF with some serious growth, low fees, and very good diversification, so it would definitely be on my watch list. But now let's take a look at the third and final ETF I have on the list here today, and that is the Vanguard Small Cap Growth ETF with ticker symbol VBK. As we can see, this ETF is no stranger to growth, having performed extremely well over the past decade. And again, it was able to outgrow the S&P 500 over the past 5 years quite easily. Best of all, over the past year alone, this ETF has grown a staggering 93.9% since the March lows in 2020, which is the best one-year performance we've seen so far. And in a minute, I'll get into why this ETF has beat out the other ETFs in my opinion. Now, taking a look inside the fund, we actually find that the top 10 holdings are much less familiar names than the last two ETFs we looked at, simply because the companies within this small cap growth ETF are a lot smaller. But a few that I've recognized are some electric tech manufacturers Plug Power and Enphase, as well as Horizon Therapeutics and Penn National Gaming. Overall, the companies in VBK have a median market capitalization of only $7.2 billion, which is slightly more risky than investing in large cap companies with market caps greater than $100 billion. But to balance it out, this fund contains over 600 different companies, so you won't be overexposed to any one single asset, meaning that there is limited downside. All right, now moving on to the fees, we find that VBK has the same MER as the last ETF VOT that we looked at, which is only 0.07% per year. So every $10,000 that you invest in this ETF, you're only going to be paying $7 in fees per year, which is really cheap. Going even further, if we compare this to the average MER of other similar funds being 1.21%, it's clear to see how cheap this is and that it will allow you to keep the majority of your returns to yourself. Finally, VBK does pay out a small quarterly distribution of 0.51%, but again, this is nothing to write home about. It's a very small dividend yield and won't add to your returns very much, on top of covering the fund management fees. But overall, I'm a very big believer in small cap companies and the growth associated with them, and I think that Vanguard has consistently been able to select some very good growth companies, and this should continue for the years to come. All right, so now to help you figure out the best ETF for your portfolio, I'm going to be doing a side-by-side comparison to figure out which of these three is the best, and then at the end, I'll be giving my personal opinion on the best one for me. So taking a look at all of these ETFs over the past 5 years, we can see that they all performed very similarly, but the information technology ETF VGT is the clear winner, up nearly 225%, while VBK, the small cap ETF, is the second best, up 130%, and finally VOT following closely behind, up 113% over the 5-year period. But interestingly, if we take a closer look over the past 1-year period, we actually find that VBK is the clear winner here, the small cap growth ETF, being up a staggering 93%, while both VOT and VGT closely traded up around 77%. Now, I believe the reason for VBK's outperformance compared to these other two ETFs is because it contains these smaller cap and more volatile companies. And back in 2020, as a result of the pandemic, the market crashed very rapidly, and I believe that the VBK ETF dropped a lot further and faster than the other ETFs, but then rebounded a lot harder too. So now to help you decide on the absolute best ETF, I quickly tabulated some of the relevant data of these funds side by side so you can take a look. Alright, so here we can see I've got the Information Tech ETF VGT, the Mid Cap Growth ETF VOT, and then the Small Cap Growth ETF VBK. So first, taking a look at the number of stocks in each ETF, we find that the small cap is the most diversified and the mid cap is the least diversified, while the information tech is about in the middle. But when taking a look at the median market capitalization, we find that VGT has the largest cap companies at almost 250 billion, and then mid cap is at 27 billion, and then small cap at 7.2 billion. Now it gets a little bit concerning when we take a look at the top 10 holdings of each ETF as a percentage of the entire fund. So for VGT, the top 10 holdings make up 56% of the ETF, whereas for the small cap, it's only 7.8%, and the mid cap is not too far above at about 14%. So taking a look at some of the valuation metrics for this ETF, we find that the price to earnings ratio is actually cheapest for VGT, whereas it's the highest for VOT, but really they're all within the 35 to 42 range. And what's interesting is we actually find this ETF, VGT, is the cheapest with the highest earnings growth rate at 20.2%, whereas the most expensive one at 42 PE ratio for VOT is actually only 19% growth rate. So in my opinion, this is the best value right now. And finally, taking a look at the return on equity, which just tells us how effective the management is in deploying their capital and getting a return on it, we find that VGT is clearly the winner here at 31%. And then VOT drops down a lot, down to 11%, and then VBK at 5%, which is not very good. But this is likely because these are smaller cap companies and are in the growth phase and not in the profit phase or reaping the rewards from their investments yet. Finally, let's talk about the risk of each of these ETFs and which one is the least risky. So one metric that I like to look at is the beta, or the volatility compared to the S&P 500. And just so you're aware, the beta of the S&P 500 is 1.0. So any of these indicators that are above 1 means it's more volatile than the S&P 500. And clearly the small cap growth ETF is the most volatile, like I talked about before. And then the least volatile are the VGT and VOT at about the same level. So this is showing a little bit more risk on the small cap growth side. Next, to determine the diversification, I looked at the number of stocks in each of these portfolios, as well as the industries that each of these reside in. So information tech is pretty concentrated in terms of the industry. So I put concentrated here. And then for the mid cap, it's got 163 stocks, which isn't that many, but it is very well diversified across many industries. So I put diversified. And then the same thing for small cap because it has tons of stocks in there. So overall, in terms of a risk level, I would say that VGT and VOT are about a medium risk. And then VBK is a higher risk because of the volatility and the companies aren't as well established. So for my overall ranking of these ETFs, I would say that the best one for me personally would be the VGT ETF, because it is showing the highest return on equity, highest earnings growth rate, and the lowest price to earnings ratio, which is a very good combination here. And although it is concentrated in the industry, it does have median market caps of basically 250 billion, which is pretty safe because these companies are integral to our economy. Then in second place, I would have to go for the small cap growth ETF because it does have the highest amount of growth over the past year. And although you are taking more risk, I would be willing to do that for the higher growth. And in third place, I would put VOT, the mid-cap growth ETF, simply because it's somewhere in between these two, but doesn't really offer that much more growth potential. Anyways, yeah, I love VGT, so that is definitely one ETF that I would put on my radar, and maybe you'll consider it too. But anyways, I really hope my analysis of these top 3 growth ETFs from Vanguard could provide you with some value and my overall thoughts on growth. And if you did enjoy this video, dropping a like on it would really help me out. And if you haven't already, definitely consider subscribing for more future content on investing just like this. And with that said, I will see you guys in the next one.